This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on June the 1st, 2012. Our time is 8:41 Mountain, 10:41 Eastern. Radio show runs AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. If you ever miss a radio show, they're archived on Harold's website, HESradio.com, rarecoloreddiamonds.com. The shows are on there. We also have a podcast. Download iTunes onto your computer, and you can listen to our radio show, subscribe to the podcast, listen to it at your convenience anywhere your portable device takes you, and you'll be up to date on the financial markets. As we tape today's show, breaking news. 69,000 jobs were gained in the United States. An absolutely brutal, brutal number. We've said for a long time, don't believe the hype. Don't get caught up in the smoke and mirrors. We're seeing a crisis in Greece. They have a vote coming up. It will probably decide whether they stay in the Eurozone or not. It could cost $1 trillion if they leave the Eurozone. Spain is in a severe financial crisis. There's talk of them leaving the Eurozone. Their banks need massive bailouts, but they don't have the money. Harold, as we tape this show this morning, gold and silver, as a result of all this news, are literally on fire. We've said for a long time, be prepared. We know it's just a matter of the timing. We don't know the exact time per se, but we know the fundamentals and the entire setup for this market is very, very positive. And we're starting to see it already this morning. Gold up $50, silver up strong. And this is why you want to have an allocation of precious metals, hard assets in your portfolio for a day like today.
You bet, Randy. It was a very surprising day, actually, watching the markets very early before they actually opened. Gold was down substantially this morning. Gold was down about $20 in the early part of the day, and silver was down about 20 cents. Then the job numbers came out, and the job numbers were terrible, and all of a sudden the markets reversed, and gold went from being down 20 to being up almost $60 on the day. So as we're trading today, gold, which was flirting again with the 1525 level, which is a very important number for gold, a support level, now we're trading all the way back up at $1,620. So what a day that gold is having on a reversal, and that's primarily due to the job numbers coming out. Silver, which was down heavily this morning also, is now up 75 cents on the day. We're down to 27 and change early in the morning, and now we're at almost $29 in silver. So the market came back very, very strong, and that's a really good sign. Now, the stock markets around the world are plummeting. The Dow Jones is down over 210 points. It's been down 16 out of 19 sessions. The TSX is down over 112 points, down to 11,400. Oil still down about $3. It's down to the 83.50 level. Now, we definitely knew that the markets were going to remain extremely volatile this year. It's an election year. You've got the sovereign debt situation in Europe. Again, we know that, you know, with this being an election year, they were going to try to make things look much better in the U.S. than they really are because obviously President Obama wants to get reelected. Today was not a good day for him. With the job numbers coming out so poorly, it really hurt his chances of reelection. But again, it's going to be a long, long battle, and we'll see what happens. But at this particular point, today was not a good day, with stock markets around the world plummeting and metals markets turning and skyrocketing in price. You see, we reported last week that a lot of the short positions were out of the market. These banks like J.P. Morgan and these other banks that were shorting the gold and silver markets have gone out of the market. So they're no longer short the market. So a situation like this can really catch a market off guard and can really make this market run. You see, the technicals for the gold and silver markets were not very good over the last few months. We've been in a funk in the market for 8 months now that the market has been going sideways to lower because there's really been no fresh news in the market except for the recession that's happening in Europe, and a recession is not necessarily a good situation for gold and silver. However, what's happening at this point, that why would the job numbers make gold go from down 20 to up $60 on the day, an $80 move in just a couple hours? It's primarily because they're going to have to restart the economy. And I think that the more that these type of scenarios happen, where the job numbers continue to come out bad, we're now at 8.2%. If you believe that number, many people believe the number for unemployment is well over 10 to 12%. But even dealing at an 8.2% level, that is very bullish for the gold and silver market, because it does suggest that we could be seeing quantitative easing 3, and if that happens, it'll catch the market off guard. You'll see them print a ton of money, the Federal Reserve, in order to accomplish this, and it's not only in the United States that this is happening. They're going to have to do quantitative easing in Europe and now in China. Don't think that the whole world is crumbling financially and China is the only country doing well. In fact, China is in dire straits. So we're looking at situations at this point that are very dire. We knew that this was going to be a very volatile year. The fact the closer we get to the elections coming, the more and more volatile these markets will become. Now, as far as oil goes, I'm very bullish on oil. And you could say that, I'm crazy because oil's dropped from basically $110 all the way down to 83. We knew that the oil market was going to be volatile, and we knew the oil market was going to try to be forced down by the governments because, again, it's interfering with any type of recovery. So, again, we've seen this happen before. They forced down the price of oil. Now, a couple things are going to happen with oil. Number one, oil prices getting this low, OPEC is not happy with that, and more than likely you will see signs of OPEC starting to cut production. That will raise the price of oil just on the fact that they're going to cut production. The reason that we've recommended oil, so heavily is that we truly believe that sometime during the summer that there will be a problem between Israel and Iran, and that could cause oil prices to skyrocket above $200 a barrel. We also felt that the government, mostly the U.S. government, was going to try to force down the price of oil before this happened to try to keep things somewhat sane in the oil market. However, I truly believe that there is a shortage of oil. I do believe that OPEC will cut production, and that will raise the price of oil. And then, again, we also feel very strongly that sometime this summer, Israel will attack Iran or something like that will happen, and the price of oil will skyrocket up to as high as $200 or higher. So again, as long as you're not leveraged in these markets, which we've said for many, many years, do not heavily leverage yourself in these markets, we're still very bullish on oil, we're extremely bullish on gold and silver, and we're extremely bullish on diamonds. So the fact is that gold has made a major reversal, and here's something that's extremely interesting and something that we really need to pay attention to. There's a direct correlation between gold and the U.S. dollar. When the U.S. dollar goes down, gold goes up. What we've seen over the past few months is the opposite of that, and that's why the gold market has fallen off. So basically, the U.S. dollar at one time was all the way down to 82 cents against a basket of foreign currencies. Now we're trading, it was all the way down to 72 cents. Now we're trading at 82.87. So in all honesty, the U.S. dollar has made a major rally of about 10 cents above its low, and that is not a good scenario for gold because they move in opposites. But basically twice this week, we have seen that gold and the dollar have separated themselves. In fact, gold made a $40 rally earlier this week, even though the U.S. dollar was strong. And the U.S. dollar was strong again this morning before the job numbers came out, and gold rallied $60. Now, we've seen this happen once before, and this was an extremely important time, and that was back in 1980 when the Federal Reserve raised interest rates all the way up to 22%, and the U.S. dollar gained tremendous strength during that time, and gold also rallied all the way up to its high of $850. So there are times when gold and the dollar are going to separate themselves, and we've seen that happen twice this week, which is extremely exciting for us because, again, as Europe continues to get into trouble, as all these countries are on the verge of financial collapse, this week we learned that Greece they're basically done. I don't see any way that Greece is getting out of this trouble. And then on top of that, many of the Spanish banks, the banks in Spain, started to get attacked. And what we're starting to see is that they're starting to close these banks in Spain and throughout Europe. Isn't this the exact same situation that happened in 2008 when Lehman Brothers went under and the U.S. had to come in and bail out all of the banks for trillions and trillions of dollars? That's why the gold market's up today. The feeling is that we're going to see quantitative easing 3, and it's going to happen sooner than later. And it's going to catch it at a time when most investors are not even looking at gold, because at this particular point, many of the investors are bearish on gold. They're not in the gold market. And look what happens as a result of that. We got a $60 to $70 move in gold in one day, and that's primarily because people aren't paying attention. The fundamentals for the gold and silver and diamond market and for oil are extremely strong. In fact, possibly as strong as they've ever been. The only thing that we've been witnessing at this point is a scenario where, again, there's massive confusion in the markets. You've got the stock brokers that are bullish on the stock market, but you've been down 16 out of 19 sessions in the stock market. So why in the world is that a safe haven for putting our money? It isn't at all. It's one of the most dangerous places you could possibly put your money at this particular point. You never invest in a stock market when companies are going bankrupt and countries are going bankrupt. It makes absolutely no sense. The Facebook IPO was a total disaster. That market is plummeting, and you've got, again, a stock market scenario that's riddled with skullduggery. And basically, there's no credibility in that market. So basically, at this point here, we're seeing a change in the markets at this time. If gold and silver can separate themselves from the U.S. dollar and just concentrate on what the fundamentals are for that market, this market is going to scream higher. Again, at this point, we made our recommendations at the beginning of the year, and the market's making us look like we don't know what we're talking about, like we're rank amateurs. But believe me, we're not. I've been in this business for 35 years. I've been through the run-up in metals and diamonds back in 1979 and 80, and again, I know what makes these markets go. But I also know in times of desperation that we're in right now, the markets will do certain things on a short-term basis that are confusing and sometimes illegal. We have no control over those type of things. Who are you going to sue? The government over bringing down the oil market? Again, the markets will always do their thing, and the trend is always your friend. So again, I know that we've all been nervous about what's happening in the metals markets. I know we've been nervous about what's happening in the oil market, but I can assure you that these markets have not seen their best days yet. The best days in gold and silver are coming, and we still have 6 months left in this year that could literally bring gold and silver to new highs. When markets plummet, like in 2008, we saw the stock market plummet in half. It went from 14,000 all the way down to 6,500. During that period of time, gold fell and silver fell on margin call concerns and situations like that. However, the gold and silver market turned and came back and made new highs as the stock markets were plummeting. We've got a similar scenario right now. We've got very similar situation to 2008 in the extent that then it was Lehman Brothers. Now it's possibly J.P. Morgan. It's the banks in Europe, and it's these derivative markets. It's the derivative market that nobody really understands, that when J.P. Morgan tried to unwind their position, they lost all of $3 billion within a couple minutes. They're petrified to get out of these derivative positions, as are all the other firms that have jumped on the bandwagon. I personally believe that it's the derivative market that will bring down the financial systems as we know it. And again, if we just sit there and do absolutely nothing, then shame on us. We deserve what happens to us. We've been doing this radio show for 10 years, and most of the time we have been dead on right as to what these markets were going to do. And we predicted in the future what these markets were going to do. I do not believe that this time is any different. I don't think that these markets are going to make me a liar in any way, shape, or form. I'm extremely bullish on the markets at these levels. The fact that a lot of the traders are out of the market makes me feel even better about this recommendation. Nothing that we do is done out of desperation, and nothing that we do is done out of anything else but information that we've gathered over time and experience in these markets. I've been in this business 35 years. I've watched gold since it was at $35 and saw it run all the way up to $850. And again, we were the first ones to predict 10 years ago when gold was at $250 that it was going to go into a bull market. And again, we just came off of $1,900 gold. Let's look at how this scenario is really working out. The fact is that gold went all the way from $250 all the way up to $1,900, one of the biggest moves ever in the price of gold. And what we saw with all this confusion in the markets and countries going bankrupt and currency devaluations and everything going on and market manipulations, all we've seen is gold drop from 1,900 down to 15 and a quarter. It's not a major big deal. And in one fellow swoop, this market is now back up to 1,620. The important number for gold is 1,525. If gold would have broken 1,525, it could have gone down to 1,475 and still been in a bull market. The fact is that there's two ways of looking at this market: technically, which is charting, and fundamentally, which is current events. We're not short-term traders, and we've said this basically on every single show. We do not trade the gold and silver market. We're long-term holders of precious metals because we believe that there will be massive inflation. And judging by what's happening today in the marketplace, that's even more reinforced. It tells me that they're so concerned about these job numbers that they're going to have to do something. If they just sit there and let the market continue to do what it's doing, we will see unemployment at a much higher level, and we will see the stock markets, especially in the United States, plummet. What we are going to see is a major rally coming back into the gold and silver market in the second half of this year. It's inevitable. It's going to happen because of inflation and because of more money being put back into the system. And when they do come out with quantitative easing 3, it's going to be massive because it's not only the United States, it's all of Europe that's in the same situation, and is China. All you have to do is read what's in the newsletter this week, and you'll have a much better indication as to what's happening and what you need to do. Ladies and gentlemen, again, we've been doing this radio show for 10 years. Nobody takes it more serious than Randy and I do. Again, the last thing in the world I want to see is my clients and listeners to this radio show do not do well. All we want is for our clients to have the information that they need to make an intelligent business decision so they can protect themselves against what's coming forward. What does a small investor like us do? What does a small investor do when the whole financial world as we know it is in jeopardy? What we need to do is just stick to our basics, not panic, and keep our logic, because basically there's no emotion to this. You don't get emotional and make the wrong move. We're in the right markets at the right time for the right reason, and there is no doubt gold is back over $1,600, silver's back up to $29. We could see a major rally coming back in the market by the end of this year, and we're still extremely bullish as things deteriorate in Europe and in the United States.
One thing to keep in mind as well, at the end of this year, the United States will have to raise their debt ceiling. And that will be one heck of a fight, as it was in the past. The United States lost its top-notch credit rating. There are analysts and money managers who believe it could get bumped down a little bit more. There's a big deficit fight and debt fight ahead, and their credit rating is on the line. As Harold was saying, quantitative easing 3, 4, 5, 6, 7. We're in a deleveraging cycle where countries and individuals are paying down money. And we will definitely see some sort of quantitative easing very, very soon. There's only one company Harold recommends you use when it comes to investing in precious metals. Let them educate you as to why you want to start your own precious metals investment account. Their name is Worldwide Precious Metals. They're a Canadian company. They're celebrating 10 years in business, and they have some incentives. Speak with them about the incentives they have on right now. Go to their website, wwpmc.com, wwpmc.com. Speak with them at 1-866-623-2002, 1-866-623-2002. Their website is wwpmc.com. They've been in business 10 years, and they do have incentives to help you get involved in this market for the first time and start your own precious metals investment account. On the gold and silver front in our newsletter this week, and you can get our free weekly newsletter from Worldwide. They'll be happy to send it out to you via email every week. We have some fantastic information. And Harold is very good at explaining the complicated and making it uncomplicated, and I will try and do that as well now. There are two things I think we need to keep in mind that is just coming out this week, and this could have a huge impact on the gold market. Now, if they're actually able to use gold as collateral for bailouts, nations may want higher gold prices. That was one of the top stories this week. Europe's debtors must pawn their gold for Eurobond redemption. Southern Europe's debtor states must pledge their gold reserves and national treasure as collateral under a $2.3 trillion stabilization plan that is gaining momentum in Germany. You can read that story in our newsletter, but what they're saying is if this Eurobond plan comes together, these nations that have their gold, they will want it to be much higher than it is today because it can be used as collateral. As well, another story that's sort of in the same vein. Rick Mills did an article, and it's something that is a must-read. If irreplaceable gold is allowed to be used as a Tier 1 banking asset, what next? And he goes on to say if the Basel Committee agrees to banks using gold, the gold they have, as Tier 1 capital, it would create substantial demand for physical bullion and be an important step towards gold's remonetization. Obviously, Tier 1 banking assets, that is the amount of money that banks need to have on hand. And if they're allowed to include gold, that would be a huge positive for gold. Ross Norman has also done a story on this issue. Get our newsletter. Read those three stories because that is another area, sure, beyond quantitative easing, the sovereign debt crisis, the job situation in the United States. You throw in the real estate market is an absolute chaos down there as well in the United States. You take all those things, but you add in some of the potential of the Tier 1 and even countries being able to use gold as collateral to dig themselves out of the debt that they're in. That adds another whole idea to this marketplace that could send it substantially higher. Whatever you do, get our newsletter this week. Speak with Worldwide Precious Metals. They will put you on the list. It's the companion to our radio show. The telephone number to connect with him, 1-866-623-2002, 1-866-623-2002. Their website is wwpmc.com, wwpmc.com. To give you an idea, we have different stories on the sovereign debt crisis. Biggest Greek bank warns of dire euro fallout. If Greece left the euro, living standards would plummet, incomes would be slashed by more than half, and inflation and unemployment would skyrocket, according to the National Bank of Greece. If Greece was to leave, the new currency would fall by 60%, according to Citi. As well, they're saying that it could cost $1 trillion if they left the euro. Greek exit could mean a 50% stock fall in euro stocks. It's a very serious time, a time to have an allocation of hard assets, precious metals. Speak with Worldwide Precious Metals. Call them and start your own precious metals investment account today. 1-866-623-2002. The website, wwpmc.com. An amazing and very exciting week for diamonds. We'll talk about it next as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on June the 1st, 2012. Our time is 9:06 Mountain, 11:06 Eastern. Radio show runs QR77 in Calgary, 630 CHED Edmonton, AM 640 in Toronto. If you ever miss a radio show, they're archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We also have a podcast through iTunes. Get iTunes on your computer And just go and subscribe to the podcast. The new show will come in every week. You can listen to it online if you ever miss a show. To connect with us, Harold recommends only one company when it comes to investing in precious metals. They're Worldwide Precious Metals. They've been in business for 10 years, a Canadian company, and they have 10th anniversary incentives you can speak to them about. The telephone number, 1-866-623-2002 to start your own precious metals investment account today. The website, www.pmc.com. The website to speak with Harold about diamonds, rarecoloreddiamonds.com. And if you would prefer to speak with Harold privately over the phone, the telephone number 1-800-432-1022. The other website Harold has is hsfineauctions.com. And there have been 5 amazing auctions this year. The next auction is to be announced, and we should have a bit of information on that very, very soon for you. But definitely connect with Worldwide, Rare Colored Diamonds, or hsfineauctions.com. This week, our featured diamond, and it is one of the most spectacular diamonds we have ever featured as the featured diamond. It is a 1+ carat radiant cut, fancy intense yellow-green diamond. We have a picture of it in the newsletter as well. There is video. Harold's website, the only diamond website on the internet with video of the diamonds. It is stunning, to say the least. But the big news this week, and you can speak to Harold about that amazing yellow-green diamond by giving him a call at 1-800-432-1022 or go to rarecoloreddiamonds.com. The other big news of the week, the biggest pink diamond ever to go under the hammer sold for twice its estimate after fetching $17 million at auction. The Martian Pink 12.04 carat pink diamond, the largest ever to hit the auction market, sold for over double its original estimate when it went under the hammer for $17.4 million through Christie's. The incredibly rare gem is one of only 2 pink diamonds in the world which are said to be of significant size, along with a 23.60 carat Williamson pink diamond, which was presented to Queen Elizabeth as a wedding gift. And, of course, she has her Diamond Jubilee coming up on the weekend. So we say God save the Queen to Queen Elizabeth and her Diamond Jubilee. And she has some of the most amazing diamonds in the world in her collection, which are on, actually, because of the Diamond Jubilee, they're on display over in the UK as we speak. We do have auction results from Christie's Hong Kong Magnificent Jewel Sale that included the Martian Pink, Harold, but oh, what an exciting time. The featured diamond is stunning. The auction results are amazing. The Martian Pink going for a record price. It's just a very, very, very interesting time in the diamond business.
Couldn't be happier, to be honest with you, Randy. Everything that you said is so positive and so true. But the fact is, the best is by far yet to come for diamonds. When you look at what's happening in the world markets, with stock markets around the world plummeting, and volatility in the oil and metals markets and stock markets and bonds and currencies, the only market that is sane at this point is the rare colored diamond market. In actual fact, at almost every auction that we've seen over the last several months, in fact, for the last couple of years, have been spectacular for diamonds. So, you know, in this crazy world where everything is just so volatile and so confusing, it's really the rare colored diamond market that is extremely sane, and it just makes so much sense to invest in that market. First of all, it's a very limited market. There's very, very few of these diamonds for sale. It's not a mass market where we have to be concerned that all of a sudden there's going to be a new mine and there's going to be a ton of new colored diamonds and the prices are going to drop. That never happens. It has never happened as long as I've been in business, which is 35 years. In fact, we see these diamonds, basically certain diamonds, double in price every 4 years, like yellow flawless diamonds, so they have a track record. But these diamonds tend to do best during these particular times when there's so much uncertainty in the world financial markets. Let's face it, nobody knows what the end result is going to be for Europe. I mean, is Europe really going to fall? Their currency markets are being depreciated. Their banks are closing. There's countries that are going bankrupt. Again, with what's going to happen with Greece, once they're out of the euro, they go back to their old currency at a fraction of what it's going to be worth. The inflation in Greece is going to be massive. And the same thing is happening in Italy and in Spain. In fact, one of the reasons why the markets were so volatile this week is that many of the major banks in Spain are on the verge of closing. So again, that's why you're seeing the volatility in these markets. That's why you saw gold up $60 today from being down 20 earlier in the day. That's why you're seeing the markets do what they're doing. But the rare color diamond market is a place to definitely have some money. You don't put all of your eggs into one basket. You want to diversify. But basically, a rare colored diamond is such an important asset to own at this particular point, it could literally save your financial life. Because certain colored diamonds not only do extremely well as far as the track record goes, but they also respond to inflation as well as gold does without the volatility. So basically in 1979 and 80, when interest rates were starting to skyrocket all the way up to 22%, when the gold market went from $35 in 1972 all the way up to $850 by 1980. During those 2 years of 79 and 80, when the gold market was running and the currency markets, because of inflation, colored diamonds went up 500% in 2 years. That means that a $20,000 diamond turned into a $100,000 diamond in 2 years. So why in the world would we not want to put some of our investment capital into an asset like that if we believe that inflation is coming? Now, myself personally, I've been in the investment business 35 years. The major reason why I recommended gold, silver, and diamonds all the way back was because of inflation. And there is absolutely no doubt that we're going to have massive inflation, not only in North America, but all over the world. That's why we've been recommending gold to you, and that's why we've been saying to put some money into the diamond market. The other thing about the diamond market that's extremely important is that it's portable private wealth. Nobody knows that you own it. It's real estate in your pocket. You could walk around with $1 million diamond in your pocket and nobody would even know it. But the fact is that we've now seen through our auctions that we can sell diamonds in other countries like we did on the last two auctions and see the foreign currency market come into play, where we've seen clients from Europe, mostly from England, where the British pound was stronger than the U.S. dollar, come in and buy most of our diamonds, which my clients are ecstatic about because, again, it means that we've got another avenue to resell our diamonds in Europe because they get the benefit of a strong currency. The currency markets are so important to all investments, and diamonds are similar. Now, the featured diamond. You will never see a diamond like this again. It's almost a 2-carat diamond. It's not an inexpensive diamond. The diamond's worth $350,000, and it's under 2 carats. But it's a pure, fancy yellow green diamond, and green diamonds, so you know, are as rare as any of the rarest blues. If you look on our website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and you go to the loose diamond section, you'll see all of the colored diamonds that we carry. Starts off with yellow diamonds, and we carry 4 different colors. Fancy light yellow, fancy yellow, fancy intense, and fancy vivid. These are the best diamonds to invest in because they're still reasonable in price. You can get involved for as little as $15,000 US, and those diamonds can double in price every 4 years, and during times of high inflation can go up 500%. And we anticipate that that will happen over the next 5 years. So meaning that a yellow flawless diamond that you can buy today for $20,000 could be a $100,000 diamond to you within the next 5 years. Then you say to yourself, well, how am I going to sell that diamond? We're the only company that can resell it for you. So if you're dealing with other companies, other diamond firms that are doing what we're doing, one thing you should be very cognizant of is that we are the only firm that has invested in a secondary market to resell our clients' high-end diamonds and collectibles. We own 8 Siegel Fine Auctions. the only real-time live auction site, and I built this for you, my listeners and clients that have invested in these amazing collectibles over the years. We have many clients that bought silver coin sets and gold coin sets from us and have put them up at auction and have doubled and tripled their money in a very short period of time. We have magnificent diamonds that go up on our auction site, and we built this primarily for you, the listeners that listen to our radio show for the last decade. We're the only company that has this. We're the only company that built something like this because nothing like this existed before. Everybody knew that the diamond market was a great market, but the biggest problem was how do we resell our diamonds? And again, through H. Siegel Fine Auctions, that's the way that you sell it. When you look at Christie's and Sotheby's, most of their business is these massive diamonds that sell in the multi-millions. But there's a gigantic market, in the $20, $30, $50, $100, $200, $500,000 market, and that's what we bring to the table. We bring the secondary market to resell our clients' high-end collectibles, not only rare colored diamonds, but high-end gold and silver pieces, and we sold rubies, emeralds, and sapphires in the past, and will again in the foreseeable near future. This is an amazing time to be in the rare colored diamond market. We carry yellow flawlesses. Again, they have a track record. They increase by 25% a year. They double every 4 years under normal circumstance. These are the type of assets that I've given to my children and grandchildren growing up over the years, and seeing that I just had a beautiful new granddaughter 3 weeks ago. She has a little beautiful yellow flawless diamond in her portfolio already. These diamonds do extremely well during times of high inflation. We anticipate that a $20,000 yellow flawless in 5 years could be worth as much as $100,000. We would love to have you own that, make the money, and then have the opportunity to sell it for you on our auction site. Then there's the Argyle pink diamonds. These are amazing diamonds. The Argyle mine in Western Australia, they produce 95% of the world's pink diamonds, and that mine is going to close. It's going to close within the next 4 to 6 years. If you're one of the fortunate few to own one of these diamonds, you could see an increase of 8 to 10 times what you're paying today. Meaning if you bought a diamond for $50,000, a magnificent Argyle pink, that diamond could be worth $400,000 to $500,000 within the next 8 to 10 years. So these are not short-term investments. You don't buy them today and sell them in a year from now. You're never going to make any money. And if that's what your intention is, you should invest in something else. But if you're looking to put something away for retirement, something that you're going to do extremely well with, something that you're going to help your children and grandchildren with, I very strongly recommend the rare colored diamond market and concentrate on the yellow flawlesses and the Argyle pinks. Now, we also carry the rarest white diamonds in the world. They're called D flawless whites. They're colorless diamonds. They represent 0.001% of all the diamonds in the world. So they're ridiculously rare. Basically, a 1 carat D flawless white can go for as much as $100,000 wholesale, over $200,000 retail, if you could even get your hands on one. The fact is that these diamonds are so ridiculously rare that they're actually used as currency at times and can double within a couple years' time. You take a 1 carat normal white diamond, let's say H color and a VS1 clarity, and that diamond could go for $10,000. Take the same size diamond that's a D flawless white, that diamond's worth 10 times as much at least and worth about $100,000. Those are the type of diamonds that we bring to our clients. These are the type of assets that you need to own in the most uncertain times in financial history, what we're going through right now. Blue diamonds have done what pink diamonds are going to do. In 2005, a major mine closed in South Africa that produces beautiful blue diamonds. They went from 200,000 to 1.4 million a carat within 2 years after that mine closed. A 700% increase just because there was no more blue diamonds on the market. Now when a blue diamond hits the auction sites, they sell for a fortune. We've seen them go for as much as $2 million a carat. Look on our website. We've got some of the most beautiful blue diamonds that you'll ever see, including an over 3 carat vivid blue pair worth over $3 to $4 million. We carry red diamonds, the rarest diamonds in the world. Very few exist. They start at about $2.5 million a carat. Then look at our selection of green diamonds. We've got the largest selection of green diamonds in the world. Green diamonds are the most difficult diamonds to cut. In actual fact, we have to take our green diamonds when they're still rough and uncut, send them to GIA so they can view them in their rough state so they'll know of the diamond, and then we have to send it back to GIA at least a couple times through the cutting process. That's how rare green diamonds are. And again, the feature diamond this week is an extremely rare, almost 2-carat, fancy yellow-green diamond that when you see the video of it, you will be like myself. I've seen that video 20 times this week because it's the most beautiful diamond you'll ever see. One other thing. Purple, pure purple diamonds, they very, very seldom exist. There's many pink diamonds and even the odd red diamond that has purple in it, and it makes the diamond extremely valuable. But to get a pure purple diamond is nearly impossible. If you go on our website, rarecoloreddiamonds.com, and you look in the loose diamond section and you go down to purples, you'll see only one diamond. It's a pure purple heart. It's worth over $1 million, and it's only a carat, the size of your baby fingernail. That's how rare these diamonds are. When you go to our website, it's almost like attending a museum. These are museum pieces. These are some of the rarest diamonds, and again, not all of my diamonds are on my website. I've got diamonds that are 10-carat blues and 20-carat pinks. So again, we have diamonds starting at $15,000 and going up to $35 million. Most of our clients invest under $100,000. In fact, many invest under $50,000, and that's perfectly great with us. We want you to get started at a comfortable level. We recommend the yellow flawless diamonds because they've got the strongest track record, and they're still reasonable in price. They start at about $15,000. We're going to go through the most difficult financial times we have ever seen. One slip up and you can find yourself losing a ton of money. We recommend getting most of your money out of the paper asset markets, mostly out of the stock markets at this particular point. Again, you don't invest in stocks when a country is going bankrupt, and that's what's happening in Europe, and that's primarily what's happening in the United States. You need to own some assets that will protect you and that are hidden assets, and rare colored diamonds have always been that type of asset. Please do yourself a favor. Go to our website this weekend, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Look at the loose diamond section. Look at our yellows, our pinks, our beautiful flawless whites, our brand new greens, that magnificent purple, and look at the featured diamond. It's not for everybody. Not everybody can handle $350,000 for a diamond. However, it's a one-of-a-kind. You'll never see another diamond like that one, and they just go up tremendously in value. And again, you want to own some of these diamonds for safety and for profit. And if we're right and inflation really takes off the way that we anticipate, and I don't see any way that it's not going to happen, a diamond will do so well for you because there is no risk to it. They never fall in price, but they do as well during times of high inflation as gold does without the risk. So again, diversification is extremely important, and with the state of the world economy and currencies going bankrupt along with countries, do yourself a very smart favor and get into the rare color diamond market. We deliver the diamonds directly to you so you own them outright. We send you our newsletters each week. We send you our auction results each week, and when the time comes, we will sell your diamond for you on our auction site, which is 8 Seagull Fine Auctions. Again, we built that site for you, our listeners, to resell their high-end collectibles, and we're the only ones that have it. And by the way, and I'm not doing this to be, mean in any way, but I guarantee 100% everything that is sold on my auction site, so we will only sell diamonds that are purchased through my company. If you bought diamonds through other dealers, please be certain that they're going to be able to sell those diamonds for you down the road, because again, I will only sell what I'm 100% comfortable with and what I've sold in the past, meaning that I know the quality of that diamond. Again, these are the most difficult times. The smartest thing to do is to reduce your risk, get into the hard asset market, diamonds and gold and silver, and we'll get through these difficult times and make a lot of money.
Rarecoloreddiamonds.com. That's how you connect with Harold. As he was saying, It's like visiting a museum online. Go and take a look at some of the rarest and most beautiful diamonds on this planet. They're at rarecoloreddiamonds.com. You can take a look at the video of the diamonds. They are simply stunning. The telephone number to connect with Harold, 1-800-432-1022, 1-800-432-1022. If you'd like to take a look at his auction site, it's hsfineauctions.com. Take a look at the past auctions and the items that were up for auction, hsfineauctions.com, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022. Get the diamond section of our newsletter from Harold. We have the story on the Martian pink selling, a stunning pink diamond. We have our featured diamond that is a must-see 1+ carat radiant cut fancy intense yellow-green diamond. You can see the video online and get the auction results from Christie's Hong Kong Magnificent Jewel Sale, May 29. In fact, give you an idea of a couple of the lots. Lot 3759 was a colored diamond and diamond ring set with a pear-shaped fancy yellow diamond weighing 11.50 carats. The estimate on it was $160. It went for $375,000. There was one other diamond, lot 3743, a diamond and colored diamond ring set with a heart-shaped diamond within a two-tiered brilliant cut pink diamond surround. The estimate on it was $3,900. It went for close to $25,000. Get the auction results from Harold and speak with him about investing in diamonds today. You take a look at what's happening in the world. In our sovereign debt crisis section of our newsletter, we send out Get the Newsletter from Harold or Worldwide. Spain faces a total emergency as fear grips their market. This is the most serious situation they've had since the Franco dictatorship. As the country is frozen out of global capital markets, no one wants to lend them money, and yet they need to somehow recapitalize their banks. How do you do it? Print money. That's pretty much the only thing you can do. Raise taxes. Well, that isn't going to work. You have a situation where money is flying out of Spain. It's flying out of Greece because people don't want to turn around and find that they're out of the Eurozone and their currency is worth 50, 60% less than it was when they were part of the euro. There's the Bankia bailout in Spain. They need about $24 billion US to bail out that bank. There are other banks in trouble as well. There is talk that the IMF may step in and try and rescue Spain. But if they do that, then you're in a position where maybe you end up having to rescue Ireland again. They need another bailout. And you look at Greece, you look at Italy, Portugal. It's a serious situation. Lloyd's of London is preparing for a euro collapse. The CEO of Lloyd's of London has publicly admitted the world's leading insurance market is prepared for a collapse of the euro, and they have reduced their exposure as much as possible. As well, the central banker for the Eurozone says the Eurozone structure is unsustainable. The president is Mario Draghi. He warned on Thursday that it's unsustainable and criticized political leaders who have said that that he believes are too slow to respond to the sovereign debt crisis well into its third year. But, Harold, we have about 2 minutes left. One thing to keep in mind, and I would encourage people to get our newsletter and read all the material because we can't get to it all on our show. But Richard Russell said this week he believes that due to Dow theory that that is a major bear market signal for the stock market. It has hit. You can read that story. Mark Faber says there's a 100% chance of a global recession. But the story I really wanted to talk about is Nassim Taleb, who wrote the book Black Swan. He thinks Europe is safer than the United States. He believes Europe is safer than the United States. The United States has bigger problems. But right now, people are running into the U.S. dollar because it's sort of like an ugly currency contest, and the United States is the least ugly. But on a day like today, when they have job numbers, 69,000 jobs gained, a brutal number, we're seeing gold and silver skyrocket. Eventually, the chickens will come home to roost in the United States. It's just a matter of the timing, Harold, and we have about 30 seconds left.
You bet. Again, it's all unfolding in front of us. It's a frightening scenario. Obviously we're not privy to every single thing that's happening, especially behind closed doors in Europe, but no matter which way you look at it, the situation is bad. What does a small investor do to protect himself? We take out insurance. We buy gold, we buy silver, we buy diamonds, we reduce our risk, we don't take any risks, we don't speculate, we pay down debt, we keep some cash on hand, and that's what we do to get through these difficult times.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful day and a very profitable day also.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number 1-800-432-1022. His other website is hsfineauctions.com. Next auction to be announced. And if you want to invest in precious metals, there's only one company Harold recommends, Worldwide Precious Metals, 10 years in business. They have incentives today to start your own precious metals investment account. Speak with them, wwpmc.com, telephone number 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.